Hello everybody and welcome to this video. So in this video, I am going to talk to you about a simple free gold trading strategy for beginners. So let's get straight into this. Right now, this is live. I've got silver on my left and gold on my right. I am talking about a gold strategy, but this works for silver because they correlate together. I'm going to be taking you through these steps. So this is my two-step model. And the strategy really is taking advantage of inefficiencies in the marketplace. I do this through the two-step model. So this is the step by step. It's just 5 steps. It's a foundational structural model. So we just go through the steps. That's all it is for any security, not just gold. So on the left, I've got silver. This is on 1 minute, but I was looking at this on the 5 minutes. I think it's just cleaner on the 1 minute just to show you what I'm looking at. Now, typically I don't trade on very low time frames. I trade on high time frames, but I just want to show that you can use this on lower time frames as well. So it's all relative. The very first thing is we're looking for is a range. So this is your A to B leg. On the left, you've got here your point A, and on here you got point B. So that's your leg. You're just waiting for this leg to be created. Now this leg is created off a swing point, specifically a swing point that has SMT. So in this case, it's an SMT with gold because we're looking at silver. A two-step is always created as a result of a SMT. However, because you see an SMT doesn't mean you will get a two-step. So not everything is a two-step. So not every SMT is a two-step, but you cannot have a two-step without that initial SMT, the thing that triggers the actual point A. Now this may vary a little bit depending on the security you're watching, especially if you're trading ES. There are some slight exceptions, but for beginners, stick to this rule. The very next thing we need is range 2. This is your B to C leg, so this leg here. This is a retracement leg. So by definition, it's not going to be longer than range 1. We want this leg to go into the 50 or 70 fib zone. This is our kill box. This is where I hunt for trades. You may need to have more than one go at this, at that kill box, but it just depends on your experience. In that kill box, we are looking for a couple of things. So I'm going to do 3 and 4 together. First, we want a fair value gap. So we've got one there in gray. Actually, let me change the color. I'll change it to yellow. And then we want SMT as well. We want another SMT. So this can be on the higher time frame you're watching or the lower time frame. I'll explain this in a second. You see, inside the skill box, we are looking for a reversal. And I will look for this reversal on the lower time frame. So for example, if I'm looking at a two-step on a 4-hour, I might look for the reversal on the 15 minutes. Now, I don't go that low in terms of time frames, so I typically use the 20-hour and the 4-hour or the 1 hour for gold specifically. For ES, very different. I trade inside a session, so I use very small time frames. But hopefully you get the idea. We're simply looking for a reversal. Now, if we look at this um, chart right here, you can see we make this low, we make this high, we make this low, and then we change. So we have a market structure shift here. That's where I took my entry. That's where I took my entry. Now, I know I was going to go long, so it's just a case of deciding where to take the entry. Now, you want your SMT, fair value gaps, and the reversal to overlap in the same kill box. This is important. SMT, fair value gap, reversal, all in the same kill box. Now, I look for two, especially if you're a beginner, look for two SMTs. The first one triggers the actual two-step, so point A. The second one, it triggers the delivery, which is your targeting. Okay, this is going to happen at point C right here. So there will be some SMT here. So say, for example, you are looking at the 15 minutes, and then you're dropping down to the 1 minute. The SMT will exist either on the 15 minute or the 1 minute or in both places. This gives you confidence that the delivery leg, which is your C to D leg, is going to happen. It's not guaranteed, but it gives you confidence. Now, when it comes to targeting, we just by default use 100% of the move from A to B. So in my case, I just took the fib, pushed it like this from point C, and then 100% right here. That's where I'm targeting. Now you can use custom targeting. So for example, I could use a fib targeting. I'm just gonna change this fib and then use my fib targeting. So we keyed off this 50% line. So I will be targeting this zone right here. You can also do that. Now the two-step model is actually a 50-50 model. Okay, what that means is you're going to need to add experience to this model to take advantage of it because it will depend on the security you trade. It will depend on what time frames you're using. It will depend on what sessions you're using. It will depend on your understanding of the macros, news, etc. That doesn't affect the actual steps, but it affects your overall uh, comfort with the two steps. So the two step is always the same. So it's the same 5 steps. Doesn't matter what the security is, but deciding when to pull the trigger will obviously depend on your experience. Now, I do have a small little edge. I'm not going to talk about it in this video. I'm not trying to hide it because I do mention it in other videos. I will create a separate video just on this edge, but I'll give you a sneak peek to this edge. So apart from SMT, apart from the fib, okay, apart from the fair value gap, my edge is volume. Okay, that's all I'll say. So a separate video just talking about this edge. So this takes my confidence level from 50 to 70 to 95%. Once I see this edge, I'm comfortable 95% that the delivery leg, which is your C to D leg, is going to happen. Now, one more thing before I go, and I want to be clear about this. Not everything that zigzags is a two-step. Very important. Number one, a two-step is only created as a result of an SMT, typically on the higher time frame. Number two, once a two-step cycle is complete, it doesn't automatically create another two-step. There is a reset phase that tends to happen unless price is reversing. So you may see a two-step, for example, going down, and then you see another two-step immediately going up. That is the only exception. In most cases, you need to be aware once a cycle is complete, a two-step cycle, price goes into a reset phase. This is where price becomes incredibly random. It can do a lot of random things. Some of that randomness might look like a two-step, but it's not a two-step. It's not a two-step. So there you have it, a really simple model that helps with a gold trading strategy for beginners. We're just going to wait for this to fully deliver. But if you like the idea of the two-step, or you just want to watch more about the two-step or hear more about the two-step, please like the video and subscribe. Let's wait for the final delivery and then we can close out the video. All right, so we've hit our target, which is basically 100%. We're pretty much there. I just adjusted it a little bit. Now, like I said, this can go higher. And this obviously depends on your overall bias for the session, for the day, for the hour. It depends. So there you have it. It's a really simple, practical, basic, I would say, model that gives you a foundation to trading, especially for gold. Now, this works, like I said, for gold and for silver. And in this example, it was easier to show you silver because it was cleaner. Sometimes gold is cleaner, sometimes silver is cleaner. Thanks for watching. I'll see you in the next video.